Hi there, Matt McAleer, President, Director of Private Wealth, Cumberland Advisors, with our CEO, John Mousseau. December 1st, Moose. It's going quickly.
It's going quickly. The year's gone quickly, and we had a November to remember, brother.
We sure did. October, we felt that heavy hand of the bond market.
Sure did.
10-year pressing up against 5%. We spoke about it every week. We spoke about opportunity. We spoke about risk. One never goes without the other. I chatted last week about having a nice week, going home for Thanksgiving with a smile on your face. No, nice follow through.
Nice follow through this week, and again, in what would normally be a somewhat quiet week, you saw Treasury Yields down another 20 basis points on the 10-year bond. You're down to a 4.30, and that part's good. It's when you go back to realize that just before the end of the month in October, that was at 5.
Yeah.
And you look at something like a 10-year AA bond, it's like about a 265 or so. That was down 30 this week, and that was down almost 100 basis points, 90-something basis points, back at the towards the end of October. So it's been a remarkable turnaround, and I think a lot of it is just tone out there, right? And nothing's changed. We know Jay Powell is keeping short-term rates high, but the idea that things are moderating in the economy is clearly resonating with investors, and I think that's been the embracing in the bond market.
Right, and that we've seen the help on the equity market.
Absolutely.
That those lower rates have done. This week it was almost, just what the doctor ordered in terms of trading action.
Right.
The NASDAQ 100 was flat. S&P up 60 basis points, 70 basis points, so less than 1%.
Right.
Where you really saw the bid off these lower rates were in small and mid caps.
Right. Nice for a change.
Russell 2000 up almost 3% this week. And in terms of any indice which shows equal weight or broadening activity. So the equal weight S&P 500 outperforming the cap weight. And the Dow Jones up 2.5% versus the 60 or 70 basis points in the S&P. Just nice to see other areas get a bid.
Some of the stocks that were kind of left behind have gotten a little bit of traction.
You look at some of these metals. We have a position in both the international and in the U.S., not a large position, but an industrial metals ETF in each. Just ripped this week.
Right.
So some of the areas that, as you mentioned, could feel the weight of possible recession, of higher rates. Any area that has to raise capital was being pinched.
Right.
And now if they have to raise capital, at least in today's snapshot, it's a little cheaper.
Right. And basically, it's a change in the financial conditions, a little better than it was, right? Not the stress in the markets that it was.
Yeah, and I wouldn't be surprised, and we talk in our investment committee meeting, we wouldn't be surprised to see the 10-year maybe trade in a 380 to 450 range for a little while.
Right. The sense out there is that the Fed may not be cutting rates anytime soon, but they're probably not raising rates anytime soon either. And so that will keep short-term rates high. But, I think what it means is that people don't worry about them really going higher unless you see a big surprise in inflation, a big surprise in jobs. We'll have a jobs number next week, or something that comes out of left field.
Yeah, okay. When we look at the S&P 500, one of the mantras or one of the focuses we've been discussing on our weekly videos is that range of 4,150, 4,200 to 4,600.
Right.
We've seen it now really dating all the way back to March of 2022. So almost 20 months right now. I'm going to pop up a chart right now to take a look at, and I've highlighted the resistance and support area. And again, this is just to give you an idea of where we currently sit as far as positioning goes, a word I use all the time.
Right.
You can see today as we close right up to that 4,600 level. And if we look to the left there, Moose, you'll see all the way back in March of 2022, where were we? 4,600.
Right.
So we've made a little run at that area a number of times. We've now entered a spot where we're making another run at 4,600, but maybe with a more constructive economic view and a little less question mark in rates going forward.
Right.
So we'll see. I think if you've been fully in cash or short the market, to be making a jump in today, at least this chart shows you what you're up against. You're buying into an area that has been resistance. We'll see if it works through, and if so, maybe 24 brings solid gains up towards 5,000.
Absolutely.
Great. Well, we're pleased that you joined us. We hope everybody enjoyed their Thanksgiving into December. Enjoy the weekend. Thank you.